Welcome to the 99th episode of Kanga Crypto News, your weekly briefing for crisp and dependable updates from the crypto world. I'm Kuba, here to bring you the latest developments and the stories that matter the most. Before we start, a quick note: everything you hear on Kanga Crypto News is researched and prepared by expert Kanga analysts using reliable sources only, but this is not an investment advice. We release new episodes every Friday. To stay on top of the most important moves in crypto, subscribe to the channel and don't forget to hit the notification bell so you never miss an important update. And now, let's get into it. Let's start with the biggest regulatory milestone of the week. The U.S. Securities and Exchange Commission approved the first spot Litecoin ETF, marking the first time an altcoin beyond Ethereum receives a spot ETF in the United States. The fund, issued by Canary Capital, will trade on Nasdaq under the ticker LTCQ. The market reaction was immediate. Litecoin surged from roughly $127 to nearly $163 within hours, a jump of about 28%. Daily trading volume climbed above $4.8 billion and Litecoin's market capitalization briefly pushed past $12 billion. The approval is important far beyond Litecoin itself. Analysts say that the decision could create a regulatory pathway for future spot ETFs tied to assets like XRP or Solana. After Bitcoin and Ethereum ETFs opened the institutional door, Litecoin may now be the bridge for the next generation of crypto investment products. Now, over to Bitcoin, which experienced a powerful rally earlier this week. BTC climbed to a local high of around $74,000 after a wave of institutional inflows into spot Bitcoin ETFs. Over just few trading sessions, these funds attracted roughly $1.4 billion in new capital. The surge pushed Bitcoin close to a key resistance zone that traders have been watching for months. However, the rally did not come without turbulence. Shortly after reaching the $72,000 to $74,000 range, the market experienced a sharp pullback. More than $220 million in leveraged long positions were liquidated within 4 hours during the correction. By the end of the week, Bitcoin was trading closer to the $67,000 to $68,000 range. This type of volatility is typical when major resistance levels are tested, especially when leveraged traders attempt to front-run a breakout. Then comes a major development in financial infrastructure. Kraken Financial has secured direct access to the U.S. Federal Reserve payment system for a master account with the Kansas City Federal Reserve. This means the crypto firm can now connect directly to Fedwire settlement infrastructure without relying on intermediary banks. Initially, the account will support institutional payment services, but the long-term implications are significant. Direct access to the Federal Reserve payment system represents one of the closest integrations between a cryptocurrency company and traditional banking infrastructure in the United States. Speaking of traditional finance entering the space, Intercontinental Exchange, the parent company of the New York Stock Exchange, has invested in crypto exchange OKX. The deal values OKX at approximately $25 billion and aims to support the development of tokenized financial products and crypto derivatives. The partnership signals that some of the largest financial institutions in the world are still actively building within the digital asset sector. Next up, institutional flows are again supporting the broader crypto market. U.S. spot Bitcoin ETFs recently recorded about $787 million in net inflows after several weeks of mixed activity. Spot Ethereum ETFs also attracted approximately $81 million in fresh capital. While these numbers are smaller than the massive inflows we've seen earlier in the year, they suggest that institutional demand for crypto exposure remains resilient even during volatile periods. Another trend gaining momentum is tokenization. The market for tokenized U.S. Treasury assets has expanded by nearly $2 billion since the start of the year. These blockchain-based instruments represent real government debt that can be traded and used as collateral on-chain. Many analysts believe tokenized treasuries could become a foundational building block of decentralized finance. On the technology side, the Solana ecosystem just approved a major network upgrade. Validators voted overwhelmingly in favor of the Alpenglow proposal, with more than 98% of participants supporting the change. The upgrade aims to reduce transaction finality times to roughly 100 to 150 milliseconds, potentially making Solana one of the fastest large-scale blockchain networks in operation. Faster confirmation speeds could significantly improve applications such as trading platforms, gaming, and real-time financial services. Finally, the altcoin market showed mixed performance this week. BNB traded relatively stable around $635. XRP, on the other hand, saw a moderate retracement toward the 138. XRP, on the other hand, saw a moderate retracement toward the $1.38 level after broader market volatility. This divergence suggests that capital is rotating selectively across major assets rather than flowing uniformly through the entire altcoin market. Overall, the week showed three major trends. Regulators are slowly opening new ETF pathways for altcoins. Institutions continue to drive Bitcoin's price movements through ETF inflows. And traditional finance is increasingly integrating crypto infrastructure into its systems. Short-term, sentiment remains mixed as Bitcoin tests resistance levels. Long-term, however, the convergence between blockchain technology and global finance appears stronger than ever. That's today's Kanga Crypto News. If you enjoyed the episode, please like, share, and subscribe to stay current with the latest developments. As always, stay ahead and stay informed in the crypto world. See you next time.
We are Kanga, beyond crypto.